Good morning, everybody. Welcome to Phoenix Trading Strategies, where strategic knowledge and information allows you to trade successfully. Today is May 23rd, 2016. It is 9:02 a.m. Eastern Time. For those of you that are here for the first time, welcome. For those of you that are back, welcome back. Before we continue, let us go to the disclaimer. Disclaimer. Future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This website or presentation is neither a solicitation nor an offer to buy or sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or website. Past performance of indicators or methodology are not necessarily indicative of future results. And before we continue, let us go to the calendar. Let's see what news we have for today, which there was quite a bit. And there is going to be quite a, well, there really isn't much news for us today, this morning. The only thing left is flash manufacturing, producer manufacturing index, and that's not going to come out for at least another 40 minutes. Canada has a bank holiday, go figure. Within the next 10 minutes, 12 minutes, we have a member of the Federal Reserve speaking. Let's see, today we had Japan's numbers came out, and all industries activity month on month came in less than expected. That's not good for the Japanese. French flash manufacturing PMI came out lower than expected. Flash services PMI came out better than expected. Their manufacturing was down, but their services were up. Go figure. German manufacturing PMI came out slightly better than expected. Services came out better than expected, so that was good for the euro. Flash manufacturing PMI for the euro in general came out slightly lower than expected. And flash services PMI came out almost as expected. What came out previously in the previous month. And later on this afternoon, later on this morning, we have a CB leading index month on month for Australia, which says weird, and consumer confidence for the euro right around 10 a.m. So within an hour. That's strange. How does it look for later tonight? Trade balance for the Swiss, German final GDP numbers. On the euro sector, public sector net borrowing for the UK, German economic sentiment, and we have economic sentiment for the euro, inflation report hearings in the UK. That's it. Really not that much news per se. It'll be an interesting 2 days, that's for sure. A very interesting 2 days. Okay, that's good. Can't complain about what isn't there. So let's see what happens within the next 10 minutes when member of the Fed speaks, and then see what happens within an hour when consumer confidence for the euro comes up. That'll be an interesting one. So I was looking at the S&P, and the S&P had already began its run down. It actually started early. They initially went up, but then they used the trend stop on the 15-minute, as you can see, to come down. Now, for those of you that are new, let me go over the indicators real quickly. These gold dots that you see here, this is our power dot algorithm. And what this does is that it actually does frequency analysis. Now, what does that mean? Basically, when it comes out, it tells you that they're about to begin to do high-frequency trading. And when they begin to do high-frequency trading, it's because they have to rebalance their order book and rebalance the risk. So in this case, they were not going to come down any further. In such a case, they went up. But now, they're here. Now, these moving averages that we use a 200, a 100, which is the gray, and then a 50, which is this one. Very common. The way we use them is different than everywhere else because we do not look for moving average crosses. That just is not a part of our strategy. We use it for what's called mean reversion, and I'll explain that later. These little magenta dots that you see here, These are pivots, and these outline the price levels that they have to go to once the trade begins. So in this case, since it did not break above this pivot or this one for that matter, actually there had to be one up here. No, this is the one. Yeah, didn't surpass this one. Came down, as you can see, they broke below this one, and now they're on their way down to this one here. So when you look to the left, it sort of gives you an idea, more or less, of how they're targeting their range. Now, we could go into this trade and go short. My only concern is that right now, it's already gone down quite a few points. And to me, that basically signifies risk. If you've missed a trade that's already initiated, then you missed a trade. Now, here's another reason why I don't want to go short. Because they're trading within these moving averages, and they have a tendency to use the 200 right now, as you can see, and the 100 as a support level, because they're using it as a mean. Now, what does it mean to be used as a mean? As a point of reference. And so they will either break through it or bounce from it. So in this case, I'd rather wait to see what they're going to do from it before I actually decide to take them on. Now, being that said and done, that's the reason why I'm not gun happy or trigger happy about this trade right now. And the same to be said about the Dow. Now, you see these dots in between the candles. These are trend dots. These are important because it's also part of our strategy, and it shows how they use it. See how here the Dow is using the or has used the 50, the 100, and even the 200 as a mean, as a point of reference. See how they've used it as a resistance level. They broke above it, came below it, and then boom, to the downside. So again, here I have my reservations about actually taking a trade, because I would have taken it from here, and we would have made a few points, about 20 points. But right now, we're a little late, and if you're late, it's better to wait. So no trade here, and that's okay. Like I said, if we would have been here at 3:15, which is 6:15 a.m. Eastern time, then we would have had two entries, this one and this one. And not much of a run per se, from 17,454 to 17,484, 40 points, but still 40 points are 40 points. This one would have been a better one, which happened at 3:30 a.m. in the morning. I mean, a real good run from 17,442 all the way up to 17,523. I actually took a gold trade yesterday, and I like gold because it looked good. It confirmed in every level what they were going to do. And it was interesting because of what was happening. I actually took the entry here at 1256.30, and I got out here at 1253.30, which was basically $3 move. Came down further, as you can see. I mean, it came down from 1253.30 all the way to 1245. A $10 move. I mean, a real nice trade. I didn't see it going any further from here when I got out, and so I basically just walked away. It would have been a $10 trade, but a good trade. Again, they used the 200 as a mean. They gave me the pattern that I was looking for in this candle. This is our signature pattern trade. They did it again here, and then they did it again here, and then it just came down, and there was no tomorrow after that. Let's take a look at something else. Let's take a look at crude, because crude actually looks interesting today. Let's take a look at crude. All right. So crude already began to come down, but am I on the correct month? No. Damn it, I hate when that happens. It's this other one, and I just had it too. I know I added it. No, that's not the correct month. Let me correct that real quickly. Instrument manager. Here, this is the one. Why isn't this here? It should be here. I added it. Let's try that. CL. Zero 0716. Oh, there it is. Interesting. Okay, so this one is actually interesting. And I was looking at it because it didn't make sense to me how it came down here, for instance. It pulled back and then it came down and it's at 47.50. But right now, I don't have a signal that I would normally look for in a trade. And that's something that would keep me out. Now, if I don't have the right setup, and see, this would be the right setup to tell me to go long. And what they're doing here would tell me go long. Why? One of the reasons is that the dollar is getting stronger and the CAD is slightly coming up. So it sort of gives me an indication that they're going to rally this, but they're not going to rally it too much. Now, here's the problem. It's already moved a buck, okay? Or actually, no, 10 cents. So 10 cents is not bad, but it isn't great. And I like to usually get into a trade where, if anything, I'm risking 5 cents from my entry. Here I would be risking 15 cents from my entry, almost 20 cents, 13 cents, and that just doesn't jive with me. So I'd rather wait on this one. Sometimes it's better to wait, especially because they're playing this game right now where, this thing should have gone up and stayed, but it has 6 minutes left in this candle. So there's no guarantee that it will continue. Now, if they do what they did here, which is basically see how they came up and they came down and they settled right below the trend dot, I'm afraid that they're going to want to do the same here. And if they do it twice, then this thing's going to collapse. So this is one reason why I'm not too desperate to get in on that gravy train, because it may not be my gravy train, it may be their gravy train. So I have to trade on my terms. So they have to give me what I'm looking for. And if I don't have what I'm looking for, then I don't have a trade, bottom line. So let's take a look and see if we have something else. So since we don't have anything there, let's take a look at the US yen. In the market analyzer, basically load up all your instruments, and if you have power dots, it'll tell you where to look so that you don't go wasting too much time. Okay, so the US yen, this already came down. I'm looking for a reason to go up. They did a nice move here. They did a nice move here, but it came down, retested. They pulled down. They've been holding this level. Here it shows an imbalance, both imbalances between buyers and sellers. Buyers are announcing in the point of control. These dashes actually isolate the point of control in the candle. See, when normally we trade, we look for what is called the open, high, low, and close of a candle. Well, this indicator actually shows not only the open, high, low, and close, but actually isolates the point of control where the buyers prefer to buy and the sellers prefer to sell at. So these little dashes, whenever they're not together the way here, it shows that there's an imbalance between the buying and the selling that is being offered by both. What the buyers are bidding, what the sellers are offering. So you want to pay attention to that because it is significant. Now, here we don't have the signature trade or signature pattern candle that candle pattern that we're looking for. And so because of that, see, we're looking for this type of pattern here to go up. We don't have that here. And what we do have is them using the trend stop along with the 50 moving average. And they've done a really good job of using the 50 moving average as a point of reference to trade away from. And that's called mean reversion. So now, for instance, we're right back to square one. And this indicator tells me that the dollar is going to get stronger and the yen weaker, but I'm not seeing it. I'm not completely sold on it. Now you see this pattern right here, I would have preferred if this was down here, but it's not. It's up here. And I would have preferred if the point of control of the buyers was closer to the sellers. And because it's not, I have to basically reconsider. Because I would have preferred this candle pattern or this candle pattern, even if this was smaller. See how here it showed that the buyer, it settled at the bottom, even though you had the point of control at the top and you had power dots. This pretty much just gave you the case that they were going to come down. They did it again here, and then they just came down like a rock. Well, same thing here. And because this candle did not go up, it actually came down. This one is being used pretty much as a reversal. So I have to consider that this trade is not planning on going long. I have to consider that the potential of this trade going short. And because I don't have the setup that I'm looking for, this trade is not in my terms. I cannot take it. I have to wait. So we continue to search. Let's look at the pound dollar. Sometimes the best trade is not to take a trade. If you don't have a trade on your terms, there is no trade. And I say that very, very, very strictly, because the whole purpose of trading is to win, not to lose. Now let's take a look at this. Again, I'm not, this one came in too drastic. This is inverted, not what I'm looking for. Here, this would have been what I was looking for. They went long, but then they used the trend stop, which basically as a resistance level. The minute they gave this candle pattern, it came down. And so here we're at a crossroads because apparently they're maintaining this level of support. Now, this candle pretty much announced long, but they went against it about from 44.67, 44.55. So again, I don't have what I'm looking for. And because I don't have what I'm looking for, I can't trade it. I would be reckless to take a trade here. So we continue the search. Until we find what we're looking for, we don't have a trade. The pound yen was actually looking a little interesting for me. And by all means, think, we've taken other days more trades from the very beginning, but I want you to really, really give this consideration. When you don't have your trade, don't trade. That's it. Bottom line is don't trade. There's no reason for you to take a trade when your trade isn't there. See, this was a reason to take a trade. You had power dots, you had the moving averages, they were using them as a mean, you had your pattern, and it came down beautifully. But here, for instance, we don't have that. Here, they did it here, they went long. Here, as you can see, they went short, and they've been holding. And so I don't have a reason to jump on this. This is actually concerning me because I would like to basically take this trade, but I don't have a reason to, and I have a problem with that. I have a severe problem with that. And so now I just have to basically just wait. You know, this is telling me that it's going to go long, but it's too close to home. And so if I look here, I'm seeing that the pound is getting ready to launch, but then the yen is starting to flatline. So is this being driven by pound strength? Could be. I think at this point I'd rather look at the pound New Zealand, and I'll explain why. Give me 1 second. This one already made the move. We're late. We are so late, it's not even funny. This one actually began at around 4:30. That's a shame. It is what it is. Can't deny what has already happened. So again, we continue the search. Let's look for the Euro Swiss. This one looks pretty decent. So look at that, these are starting to move, but I'm not. Even the US yen. Let's take a look at the US yen since we were there earlier. Give me 1 second, I'll be right back. Okay. So you see, they did use it, but nothing extravagant. That's what I was concerned with. There was nothing extravagant about this move right now. Again, it's not giving us what we want. Now, one thing's for sure is that they are trading above, they are maintaining above the trend dots, but it's too close for comfort. See, this is normally the candle pattern that we look for. Now, I'm going to give you a reason to analyze this even further, because this may be a trade that we may be interested right now. Now it's time to bring in the volume indicator. It's going to take about a minute or so, maybe less, to populate. Just takes up a lot of data. Give it a minute, we're almost there. Okay, now let's see this. Okay, so this is an inside candle and it failed. This one was bullish. This one was bearish. This one was bearish. All these were bearish, even though this had a bullish candle. It had bearish volume. So we have volume divergence actually from here. But we also have it again here. Now, the interesting part about this is that when you're looking for volume divergence, the way we are here, we also need to have proof that they are going to not come down. We don't have proof that they're not going to come down. We don't have proof that they're going to go up. And so someone is lying. Either the buyers are lying or the sellers are lying. We don't know yet. And until we know that, we cannot take a trade. So as much as we like this trade because it looks good to the upside, and with volume divergence, price action in the same direction, I would be the first one to say it looks good, but it doesn't, because it's not giving me what I need, which is my trade. And my trade is my trade. So again, we're at a crossroads. Let's take a look at the Euro Aussie. Don't worry, we will find something. Make no mistake. It's just a matter of time, and it has to be on our terms, because otherwise we're just shooting blanks. I don't like shooting blanks. You know, that gold trade, when I took it yesterday evening, it was a good trade. I just didn't want to hold on to it. You know, a $3 move in gold is a pretty quick gift in a matter of 2 hours. And actually it was about it was close to 2.5, almost 3 hours. So after that, I just, you know, if I don't see a trade move aggressively within 2 hours, then I won't hold because it could reverse. And so I just like to be a little bit more conservative from that perspective. Give it a minute. We're almost there. Okay, let's take a look at this. So this is the Euro Aussie. It made its move earlier. Let's see if they have something for us. Nothing right now. I have volume divergence to the downside, but as I said, someone is lying. Let's see this indicator. The Euro is coming down. It's the green line. Aussie is going up. And if that's the case, then that means this should be coming down based on this. Now, if that is correct, then I cannot in good standing take this trade long, because it means that they may be using the trend dots as a resistance level before coming down. So I have to wait. Why do I have to wait? Because someone is lying. This thing is this way, and volume divergence is this way. These two principles cannot exist. You cannot have volume divergence to the downside, and you cannot have price action to the upside. Someone is lying. So when you have this scenario, you have to basically wait. Now, this is important because here, for instance, I'm looking to see if there are any pivots around here. And so I will go back and see if there's anything that I could use. Nothing here, nothing between here, yes, but they've already surpassed it. And so at this point, like I said, I'm waiting. For all I know, they could be coming up to retest. But one reason why I wouldn't go short is because when this candle came up, this candle opened right above it and moved to the upside. Now, granted, it has not broken through this previous point of control, which is sometimes a point of reference, but I still don't have a reason to jump in and take risk on. Until I have that reason, I cannot take that trade. And so again, I'm looking for specific information. But remember I told you that they would possibly reverse, see how they went up and then basically pulled down? Now, if I take this trade here, I'm reckless because I need to wait to see what happens. And right now, the volume in this bar specifically is, look at this, it's still bullish. You got 47 million on the buy, 45 million on the sell. This is where our volume indicator differentiates from all others, because it actually shows you the buying volume and the selling volume. So that makes a big difference because it tells you if this bar will be bullish or if it will be bearish. Now you have bearish volume. And it looks like this will be what we were looking for. Now I can, you know, actually consider taking this trade down. Why? Well, it already started. So I'm going to get in 2 pips late. But see this candle pattern right here? And you see how this bar was bullish and then it started going negative, bearish? This is usually a good sign because what they did is that they went up, tested, and then pulled back down. So and remember, they're still trading below the trend dots. So long as that continues, then this trade should come down. So remember I told you, someone is lying. It's either going to be volume divergence that is lying or price action. But both concepts cannot coexist with one another. So here, for instance, now I know that my risk has to, as soon as they come down here, if they come down to 155.31, which would be a 10 pip move for me, I have to consider if they don't break below it, then I have to exit. My risk is limited. You know, what am I risking here for my entry? I'm risking no more than 7 pips. Why? Because 155.50 is where my stop loss should be, and that's where you should put your stop loss. So now, again, we're looking to see price action is basically being defined now by negative volume. So we'll see how it plays. This isn't over yet. Remember, this candle still has 7 minutes. Let's see what happens. You got 82 million on the buy, 97 million on the 98 million on the sell. That's only gone down 3 pips. I would have expected this thing to come down a little further now. You got 102 on the sell, 88 on the buy. Difference of 13 million, 12 million. So again, you know, this is still subject to how the volume and orders are coming in. Now, I would have preferred if we would have had power dots, make no mistake, but we didn't. You know, they retested the level again, the high, and so now it's just a matter of basically waiting. 4 pips, 3 pips, 22 million on the negative. And again, this is what I look for. I like this. See, the buyers are willing to buy up here, but the sellers are not. Go figure. This is an imbalance of the worst kind. Now, this one here announced the same, that the buyers were not willing to buy any higher and that the sellers were willing to sell at a higher price, but not higher than the previous point of control, which was here. So that said a lot. Any questions? And let's see where this trade takes us. I told you we were looking for something. It wasn't there. Maybe it's there now. You got 115 million on the buy, 148 million on the sell, in terms of 33 million negative volume. That's a lot of volume in that candle. I would have expected a bigger move by now on this one. Here's what I'm looking for this trade to actually make sense to me. I would need this candle to actually close here, where this one was, at 155.35 or lower. Then I would be more comfortable with the trade. As right now, you know, granted, we still have, you know, see how the buyers are starting to come in and how price action reacted. Now you have 140 million on the buy, 161 on the sell, difference of 17 million. So the buyers are starting to come in, but the sellers are still maintaining control. Four pips. Now the sellers are coming in. Now you have 150 on the buy, 179 on the sell, 180 on the sell, 154 on the buy, 181 on sell, difference of 27, 28 million negative volume. So these are small little details that normally you would not even consider looking at, but very significant to them. GPUSD going long. I understand. We're not in that trade right now. We're in this one, and I can't go looking at that right now. Now we're up 5 pips. Ooh, 6 pips. Okay, let's see. And we have 2 minutes left, and that's what I wanted to see. 7 pips. I needed to see them close. If they close below these 2 candles, then I'm good. Then at that point, I feel that this trade has the potential to come down. Now, this is mean reversion. When they've traded away from the mean and they trade towards it, this is going to be interesting. So hopefully they come down to it and they come to the 200. If they come to the 200, then we're looking at around a 20 pip trade. Now, if they continue below that, then, then it'll be better, of course, for all of us. But in the meantime, like I said, we're looking for something specific. We have 30 million negative volume, 193 million on the buy, 232 million on the sell. Difference of 37 million, 36 million, 35 million, 36 million, 37 million negative volume. 40 million negative volume. That's 8 pips. One minute left. Now it surpassed the 200 million in both. You got 223 million on the buy, 261 million on the sell, difference of 37 million. It came down 8 pips. Let's see how much further it comes down. And here we're gonna hit a pivot right here. So this is important because if it surpasses this pivot right here, which is at 55.31, then it has got to come down to 55.25. See, this is why these pivots are important because they map out the next levels. And this pivot is lining up right here perfectly with a 50 moving average and the trend stop, which makes it dangerous. So we're actually looking for specific movement now. And if we get it, then we know that the trade is favorable in our direction. If not, we got 9 pips. Then we need to consider exiting and taking what's on the table. 10 pips. Let's see if it breaks below. Good thing is that this candle formed a pivot right below the arrow. So, excuse me. Let's see what happens. What I like about this candle is that with all the volume, it didn't settle too low, so that gives the opportunity for this next candle, this next volume bar to come down further. Now, sometimes after a high frequency bar like this, the next one will have less volume, but more price action in that direction. And again, I'm not looking for much. I'm looking for it to come down here to the 255.20. If it comes down, then I'll be satisfied. But remember, this is what I was afraid of, them using the trend stop and this moving average as a point of reference to go up. So now we have to consider what they're planning on doing. And this is where looking at volume makes sense, because now you have 43 million on the buy, 46 million on the sell, 45, 46, now perfectly broken down, 47 million on the buy, 46 million on the sell. So now you have bullish volume dominating, 48 million on the buy, 46 million on the sell. But it's still, remember, it's trading below the trend dots now. So for all we know, they can come up, test the trend dots, which would be in the middle of these candles, and the next one would form right about here. And if this thing doesn't come up, then this thing must come down. Now, this is a trade, where basically they went up, came down, consolidated, and they've been consolidating. So we have to take into consideration that this whole scenario that they've been doing here has been really to distract people from the real trade. And the real trade is still undefined right now. We still don't know if it's going to go long or if it's going to go short. It came down short, but it's still boxed in a point of consolidation. So that's what makes this trade a little bit concerning. Again, I would have been more comfortable if they would have broken below 55.31. That's just my comfort level. Only because I didn't like the way the trend stop and the moving average had merged, and that they could potentially use it as a point of reference, point of support. And see, this thing has bullish volume now. 78 million on the buy, 59 million on the sell, 60 million on the sell, 62 million on the sell, difference of 17. So as the volume's coming in, I need to see a reaction from price action here in the candle. I need to see how it reacts to the negative volume that's coming in. 66 million. So I have 13 million net bullish, 80 million on the buy, 67 on the sell. Again, you have 14 million that should have driven this up even higher, and it hasn't. It's still trading below. So you had 86 million on the buy, 72 million on the sell. Now, if this candle comes down, and let's say it does settle with negative volume before it closes, then the next candle should be the one that brings it down even further. Okay, we're up 4 pips. 5 pips, 6 pips. And you can see the sellers coming in, 94 on the buy, 88 on the sell. Difference of 5.9 million, 89 on the sell. 91 on the sell against 94, 92 on the sell against 94, 93 on the sell against 94 million on the buy, 94 even between both, 96. Now we have negative volume. So let's see what happens here. 97 million on the sell, 98 on 100 on the buy, 99 on the sell. Now you have bullish volume, 103 on the buy, 99 on the sell, 104 on the buy. There was a 5.9 million bullish, 106 on the buy, 103 on the sell. 3.8, 105 on the sell, 106 on the buy, 106 even between both of them. So you can tell that there's a fight to see who's going to control this thing. But more importantly, I'm not interested in that fight. I'm interested in seeing how they maintain at this level, and whether they come down when there is bearish volume coming in. That is what is of concern to me. Again, I'm back at 9 pips. Now, if in this candle I don't see them break below this level, below 55.31 or 55.32, which is where they bounced from, then I'll take what's on the table and I'll move on. You can't force a trade to do what it doesn't want to do. Any questions? Okay, 10 pips. Now it has to break below 55.31. That's where we're at, 11 pips right now. If it breaks below that, then we can target another 10 pips from there. And that would be a 20 pip trade. And if it breaks below that, then we have a good run. Based on the next pivot, I'm looking at 55.07 if it breaks below this one, 55.25. First, it's got to break below this one, 55.31, then 55.25, and then finally must come down here to 55.07, which would be a decent trade for the morning. So let's see what happens. 148 on the buy, 159 on the sell, difference of 11 million. But look at all the price action. Look at how far it's come down. 11 pips, 12 pips, 13 pips actually. My mistake. Oof. Let's see. Remember, 155.25 is the next level if it continues, and then 155.20 for that moving average. And we got 2 minutes left on this candle. Euro, Aussie is starting to flatline. The euro is starting to flatline. See the Aussie here? I would need it to angle up, but it's not over yet. This is on 20 minutes. So we'll see what happens right now once it closes. Now remember, we do have Euro data coming out, which would be consumer confidence within the next 10 minutes. So if this thing continues to go down, maybe they know already that the numbers are bad. And so we will look at it right beforehand. And if this continues to come down, then we're good. Can't really set a trailing stop correctly here with this platform. On MT4 you can, but this one's a little tough to actually program it. Oh, yeah, you can put a trailing stop. I would say put a 10 pips trailing stop. Make sure your stop loss is, if you're positive, you should move your stop loss to 55.40 to at least have 3 pips, positive in your favor in case of an adverse movement. Now here's what I have a problem with this one. See, this one has bullish volume. And again, they're using this moving average, which really just gets under my skin. But this candle came up, came down, and closed below this previous candle. So now we have to basically see how this maintains. Now you have 48 on the buy, 49 on the sell, 50 on the sell. And again, we're at that pivot where we need this thing to come down below 155.31 and maintain itself below 155.31. Here's what I don't like about this trade. the way they're using this moving average, and number two, that in 8 minutes we have a news release which will impact positively or negatively the euro. And if it impacts it negatively, then this thing should come down like a rock. But if it impacts it positively, it'll come right back up. But if they're coming down, if they continue to come down before the announcement, then that's a good sign. That means that they've already decided and already have numbers based on that, what to do. Has slightly negative volume. You have the buyers coming in now to control it again. 82 on the buy, 84 on the sell, 87 on the buy, 86 on the sell. Again, they're right back to where they would normally be. So if we box this in, basically, this is where the trade is at right now. It's been there before. Ouch. So we need it to break below 155.26. Use every tool possible to define your support and your resistance level and the range that it's trading so that you're not confused. Try and outline as much as possible. Remember, when you're trading for real. Whether you're simulating or not, you're trading for real results. Why do I say real results? Because you're looking to define your strategy to see if your strategy works. You're looking for consistency in your strategy to see if you need to, make any changes, etc. Don't be afraid to outline information in the chart that would only make sense to you. Okay, let's see where we go from here. 6 minutes left. I'll be happy if they break below 155.25. Let's see. If it breaks below that, then it's got to come down to 155.07. At least that's what we would assume. 155.26, 25. We're almost 20 pips in the game. We're 1 pip away, 2 pips away from being 20 pips positive. Is that possible? Looks like it, yeah. Yeah, we're positive 20 pips now. It broke below. Excellent. Now, if you're in a trade and you know that there's news that's going to be coming out and you're not sure what can happen, very simple. Take what's on the table. Be comfortable with your decision so that you do not, and I repeat, so that you do not feel uncomfortable with what you have. Sometimes it is better to just take a profit and move on. It told you it came down to 155.20. So it's at 155.25 again. Let's see if it breaks below it. We still got 4 minutes left. Come on, break below it. Hit the money. There it is, right smack on it. Now it's time to go below. Punch right through it. If you go right through it, you got to come all the way down here, buddy. 155.08 is where we're waiting for you. With open arms. $10 pips down. Come on. Give us another 10 pips. Put a smile on our face. So far we're smiling. I'll make us giggle. Three minutes left before the announcement. Now you should consider moving your stop loss down to 55.31. And do it now because you got 3 minutes left. Let's see the volume, 180 on the buy, 214 on the sell, terms of 33 million. Beautiful. And it's still coming down. Two minutes left before the announcement. Now my greed has limits. If I see that I'm up this amount of pips, which is practically 30 pips on a trade before announcement, I will usually take what's on the table and say thank you very much. I don't need any more strong emotions. If it continues to come down, it's okay. You know, sometimes it's better to play it safe and not be sorry. See, they hit the mark, 155.08, which is where I was expecting them to go. But like I said, sometimes it's better to just basically take what's on the table and not worry about, you know, if the news comes out and it goes against you. And we'll wait right now because there's 1 minute left. There is 1 minute left. Any questions on the trade? See, the beautiful thing about this system and the way that we trade is that your recovery time can be very quick. Let's say that you have two trades which just didn't work out. You'll find a third or a fourth one which will work and basically bring you right back to break even, if not into positive grounds. But I don't, you know, I tried to avoid that as much as possible. I tried to trade as consistency as possible. So I have to stick to the rules. Okay, we got 1 minute left. Let's see what happens. They hit the mark. Oh my God. 155.08 straight to the pivot. See how they're playing? They're waiting for the news. Okay, the news came out and looks like they're going to continue. Their next level will be here, 154.94. That's where it should go. I couldn't get 40 pips out of it. I got 30 pips out of a 40 pip move. I'm not complaining. Believe me when I tell you. You know, the fact that I win and it's on my terms, that's all I can ask for. Okay, so let's refresh this. And consumer confidence came in better than expected. Wow. Oh, this is interesting. See, this is what I don't like about fundamentals sometimes when they're released, is that you just can't tell. And so they'll trade away from it. See, now there could be a trade to the upside, but I don't care anymore because I've already accomplished what I wanted, what I needed. See, this isn't on my terms anymore. So now it's time for me to move on. Never, if you've already won in a trade, move on. Never stay in the same trade because you're going to get tempted to go back in and you may lose. You may give up what you've already won. In this case, we're already up 30 pips in one trade for the morning. I like to call that a victory. Let's maintain that victory in our favor. Okay, now we're looking at the Dow. Okay, see, this is the type of setup that I like. And so this tells me that they're going to rally the market. And I would actually take this trade, and I wouldn't risk more than 10 ticks. Why? Why am I even remotely interested in this trade? There's quite a few things that actually tell me this trade looks to play to the upside. One, I have volume divergence. Two, I'm up 4 ticks. Three, I have price action to the upside as well. So what's my next level? Number one, they have to break above this pivot. If they break above this pivot, 17,502, I'm expecting them to go to 17,513, 17,515. So that's another few ticks. And this hopefully come up to 17,530, which is what my goal would be. So now I'm up 11 ticks. Again, sometimes you just got to wait for the right setup. This is the signature trade that we look for. This is the one that we define on our terms. This arrow, this bad boy. See the difference? See how it came down, even though it settled negatively. Okay, what was the difference here is that, number one, they used the trend stop to go up. Number two is that you see how volume started to settle higher here in the bars. And number three is that this one opened, and the minute it surpassed these, this level of power dots and wicks, that's what told me this trade has a potential to continue to go up. Now, of course, I want, greed kicks in, and I want more. I want more than 10 ticks. I want 20 ticks. So let's see if it gives me the 20 ticks that I'm looking for. Again, this pivot right here is being a nuisance to me, which is at 17,502. I'll be comfortable once it gets to 17,510 and stays above there. So far, I can't complain. I'm up 9 ticks, 10 ticks, 9 ticks. There it is. Let's go. Hit the money. So you can trade 3 different asset classes. You can trade futures, you can trade stocks, you can trade Forex. We already took a Forex trade. Now we're taking a futures trade. Or if you're trading outside the US, you can trade this in CFDs. Okay, now I have a problem. See, it's bullish, but it's not bullish enough for me at this point. I really need this candle to make a move, and it's 5 minutes into it. So it's already moved significantly. All right, let's see. Let's see how far you go. What's the next one? Right there, 75.13 is the next pivot. See it? And then 75.15, 16. So let's see if it goes to 75.16. If not, I'll exit. And I'll take my few pips out of. Ooh, it broke right through it. Oh, hallelujah. Come on, keep going. Keep going. Here's the problem that I have with this candle. It's too big, too fast in 10 minutes. So at this point, as much as I'd like to stay, I'll take what's on the table and I'll wait. So I took 9 ticks out of it. Now we're up 2 trades for the morning. Not bad. Again, I'm done with this trade. Now I need to go look for something else. Let us see what else is there. Let's take a look at Crude. See if Crude has anything for us. Give it a minute. Oh, while this comes up, I'll be right back. Yes, really quick. Yeah. Okay, let's take a look at this. This will be interesting. All right, so they came right back, retested it. This is a pattern that we're looking for, except that they overdid it coming down, as you can see. And now we have a discrepancy between the point of control and the body of the candle. This isn't the one that I'm looking for. Great. It's the other one, this one. I'm going to have to remove that one. I'm sorry, my bad. Let's see. I was on the wrong month. Yeah, they popped. Oh, God, I hate when they do that. Great setup here at 6:30. Boom, to the upside. I wasn't sure about it, but it moved from 47.50, 48.07, 57 ticks ain't bad. That's a pretty decent move in crude. So now we know. Now I did hit the moving average right on smack on the money with trend stop. So they came right back to, not the open, but came very close to it. They're not going to come back all the way up here to 48.45. So they might. But no, we're a little bit late on this one. Once we're late, you're late, and you want to accept the fact that you're late. Let me see if there's anything here in FX that we may be missing. Euro pound. Actually, let's take a look at the pound dollar. Someone mentioned the pound dollar earlier. So remember, if it's on our terms, then we trade. If it's not on our terms, then we don't trade. We have to be very strict about that. Last week I wasn't too strict about it, and I made mistakes. This week I'm going to be very strict about it because I want you to see the power of consistency. and respecting and maintaining your strategy. When you do that, your results can be and will continue to be favorable. The minute you deviate from your trading plan and strategy, then that's when you begin to lose. So here, for instance, pound dollar moved up, didn't move much. 20 pips is not a lot. I don't like the way this thing played here. It's still positive, and that means that this one has a potential to go up, but I'm not sold on it going up, quite honestly. Because, you see, I would have preferred if this candle would have closed with a negative outcome here, okay? But it didn't. However, this candle is starting to come down. And there's a pivot that they didn't surpass, which is right here. So I would actually sell this here and know that my risk is 5 pips. If I can basically determine that my risk is 5 pips, I could take a trade. Now, let's see how this one plays. I'm not looking for much. I'm looking for 10 pips, maybe 15 pips out of this trade if it goes in my favor. Because I see how they're using 200 moving, the 50 moving average as a resistance level, and how the trend stop is also formed here. So if this trade does come through, first it's got to come down here to 44.67, which would give me, 13 pips. And then here, 44.64 should give me 15 pips. And then finally here would be, my 20 pips would be here at 44.60, 44.55 or 56 is where it should end. This would be trade number 3. Normally, in the US session, you will find between 3 and 5 trades. Normally. Minimum 3. Now, if you get 2 out of those 3 trades, then you're good. See, I don't like the fact that it's holding. And I don't like the fact that the trend dots are here. This thing has to go below 44.77. See the trend dot right here? The next one's here, and the next one's right here. That bugs me. And because it bugs me and I'm uncomfortable with it, I'd rather get out, take what's on the table. If I'm a break-even, I'm a break-even. It is what it is. But it's not giving me what I want. And it has to be on my terms, and I have to be comfortable with it. So it's not going to be below 44.77, which is where I feel comfortable. I'm out. I'd rather not risk. I'd rather be sure of myself. See, now it came 44.77, but it's not breaking below it. And that means that it could bounce off the trend dots. Now it broke below it. Go figure. Matters not. I have no regrets. I've already got 2 trades in my belt. This would be a third one that I wasn't too sure of, but I still ended up positive with it. So I have to consider that. And that's basically it. See, now it came down. We would have been up, a few pips. It is what it is. Like I said, I don't like to cry about trades. It's not what I like. Let's see. That euro pound was an interesting one. Looked interesting. Let's take a look at it. Now, this system, you can trade it on the higher time frames, and on the higher time frames, when you find a good pattern, man, I think I'm going to show you that right now, actually, because at this point, I think that we've already done quite a bit of damage to the market with what we've been trading. Now see this pattern, again, I have an issue with this. It didn't settle with a bullish outcome. It settled with a bearish outcome. And the trend dots are here, and they've been using the trend dots as resistance levels, as well as using the moving averages as a mean. So this is where it becomes a dangerous trade. Why do I say that? Because of how they use the moving averages. Unless you see them drastically, see like here, they broke above, and they really broke above it quickly. Then, I would have preferred this type of move, but they didn't. And so now I sort of have to question, the intent here. And because I'm not sure of the intent, I can't take that trade. So let's remove the volume indicator real quickly, and I will show you on a higher time frame this trade so that you can see that even on the higher time frames you can find trade opportunities. So normally when I'm looking at a trade and I want to map it out, I'll start from the very top, from a 1440 level, which is a daily minute level, okay? So I'm going to go over this real quickly because I think it's important. I think that you'll benefit from it. Now, see this pattern here is normally something that I would look at to go long, but now the way that this is trading inside this one, it sort of concerns me. And see how they're using the trend dots as resistance levels? That means they could come down from it. So I'm not too open about that. So I'll go down to a 720-minute level. And on the 720-minute level, that's basically a 12-hour level. It'll give me a better indication, But see here, see this pattern here? I would have taken this pattern short. I would have taken this pattern short based on this candle pattern. This is what I look for. The same if I'm looking to go long. This here would have been the one that basically announced long, where this one announced short. It didn't go down short any further. It had already come down short. Here, it's announcing short, but this candle didn't continue, and it stopped right at the trend stop. So it bounced up. So this one's still a little bit undecided. I'm not sold on it yet. Now here, see how they use the trend stop here? See how this pattern basically announced. They did come down, came back up, and now of course this one's here. But they did come down. That's without say. So this one basically is announcing that these two are announcing that this is still going to come down. It's trading below the trend stop. There aren't any pivots here on the higher time frame. So it has a potential to really come down. We have to consider that. We continue to scroll down into the time frames. We go to a 480-minute, which is an 8-hour. Okay, so here, see how they use on the 480 the trend dots to the upside, but they're using the trend stop to come down. So again, this announced short. This came up slightly, but in the higher time frame was much more clear to come down. And up here, this announced short. They did it right off the mean. This announced it. This announced it. This, if I add more days, it'll come up. So if you can see it in a higher time frame, my God, I mean, you cannot ask for anything better. So that's why we like to do multiple time frame confirmations when we trade. And for instance here, see on the 300-minute how there are power dots. This is telling you that there's high frequency trading here. Now, if you have power dots in a higher time frame and you don't see price action break above them, guess what? It's coming down. That's why this thing is down right now. So, this algorithm is very powerful, not only in the small time frames, but in the higher time frames. So you have to watch for that. These are details that normally you don't see in other systems. Why? Because they do not encompass high frequency trading. They don't encompass real volume because, they just don't even know where to begin. They don't understand what mean reversion is, which is basically a strategy that the banks are using in their algorithms. And so it's just something that is beyond their level of understanding. Why? Because they haven't worked in the industry. I used to be a commodities broker. I was licensed for futures and for Forex, and I worked with a team of developers, and we developed the first electronic communications network back in 2008, 2007, 2008. So, we were cutting edge. We did things that many people never even thought of. Now everyone has access to, an ECN, straight through processing. There's two type of books. There's an A book. There's a B book. A B book is basically where your brokerage firm is taking the opposite side of your trade, and so they're interested in you losing. If you're in an A book, then that means they're passing through your trades to another liquidity provider, and so they're just taking commission. They are not interested in your losses. Let's continue. 180. Let's go down to the 120. Okay. Now here, again, see this pattern. See, I would confirm this with the volume, but I'm looking for specifics. Like, see this pattern here, I would have confirmed with the volume. If the volume would have settled bullish, this is a trade that I would have been all over. This one, yeah, you had two of them right smack off the moving average, and they came down from 77.43 to 77.09. Not a bad trade over, a day. Let's go down to the 90-minute. Again, I would confirm most of these with the volume. If I see that the volume is, in line with their trade, then I'm all over it. If not, then I don't have anything to talk about. Here they use the trend stop, and as you can see, they settled below the points of control. This is the one that basically would have given the trigger, and then this one just completed it. It came down from 77.43, to 77.32. Quick 10 pips. Not a big trade, but at least it confirms direction. Once you have direction, that's important. Then at that point, you can assess whether that trade is legit or not legit for you. Now, during the European session, there will be better opportunities because there's more volume. I cannot say otherwise. You have to take that into consideration. This here on the 45-minute, I would have looked at this trade. And let me add the volume here because, here's where it starts to make sense to look at volume. And if you can really identify it, then at that point, where is it? Right here. We'll look at that specific candle to see if it lined up perfectly. Okay, see, it didn't. It didn't settle bullish. See, it still settled negatively. This one was negative. This one was a smaller candle. It did settle above, but it didn't give me what I was looking for. So if I mark this candle and I continue to scroll down in the other time frames, I'll look to see what it looks like. See, this one settled with a negative outcome. It was bullish, settled with negative right here, negative 19 million. And what was the outcome? Down. So there's a specific pattern. Whenever they don't have it quite clear, then there's risk. Whenever it's clear, the risk is minimal. Let's continue. 30-minute. And believe me when I tell you, that is how their algorithms are working right now. I mean, this is very logistical, systematic, and consistent. It is incredible. See here, on a 30-minute, see how this one settled higher than the previous one. It starts to become a little bit more clearer. Then this one popped. And when this one popped, then this was the trade to get into. from 77.16 to 77.47, not a bad trade. Now, of course, see how this one was bullish, settled with a bearish outcome. This one was bullish with a bullish outcome, but you had power dots. This one here wasn't the one. This one, the 30-minute, this was the trigger. This was the one that told you, wait for it, wait for it. And you could have gotten in on any of these candles. Again, it wasn't a big trade. It's not about how big the trade is. It's about how consistent the forecasting is. That is what makes a difference. That is what will get you to the next level as a trader. Here, for instance, on the 20-minute, settled with a negative outcome, positive, negative, negative, positive. But again, there is, the power dots are basically the ones that held it, and then this one finally came down, and that was it from that point. Here, you see how this candle here starts to settle higher. Even though it didn't settle bullish, it was higher than the previous one. This is on 20-minute. So you start to see how in the smaller time frames it starts to make sense. See this one? This is what I like. And if there are power outs behind this, I'm all over it. It's a bearish candle. Okay, it was bullish. Why was it bullish? Because this bar is bullish. So that means that it started here, came up here, settled negatively, as you can see, and that is what you're looking for. It's a very simple, systematic pattern. What we've done with the volume price identifier, which is the point of control of the buyers and sellers, is that we have been able to decode their intent. And when you combine this pattern, this imbalance between the point of control and the body of the candle with volume, this is a secret that they don't want you to see. This is why you are here. This is why we have consistent results that no one else out there has. Because when we forecast trade, we are 95% accurate with the information that we are given. And this is why you cannot continue to trade blindly. The moving averages really, they only serve one purpose, as a mean. And if you understand what a mean is, then you'll understand why we use them. No other reason. And that is basically all that I have to show you for today, ladies and gentlemen. So I want to wish you a good week. For those of you that are signed up for the European session, which is our forecasting room, we will be there this Thursday morning from 2 a.m. to 4 a.m. Eastern Time. For those of you that haven't signed up for it, you should consider. It's $197 a month. It's very minimal. You can actually go to our website and go to trade forecasting. And basically every week we do it. We're pretty much very consistent with how we trade. We do the same thing that we do here, except that I don't explain as much. I simply just look for live trades. Understood. Send me an email, Rich. So that's pretty much it. I want to thank all of you for joining us today here at Phoenix Trading Strategies. We will see you Friday morning, same time, same place. Have a great one. Bye-bye now. And look for the video. We will be posting it on YouTube and sending out an email either tonight or tomorrow.